So it's going to be blurry, it looks like, because the connection I'm guessing here is a little bit rougher out in the Ozarks right now. So I apologize because if it's blurry for you, because it's kind of blurry for me, is what it is. Hopefully the message comes across and get the information we're trying to convey. So thing to consider. I work with a lot of people doing the BRRRR, which is the buy something that needs to be rehabbed, then you rehab it, then you refinance it, then you rent it out, then you repeat it. Now, I say it that direction. Most people say they rent, then refinance. I say refinance first. Why do I say that? Because you want to get your appraiser out there before people move in. Appraisers, although they're supposed to be the type of folks that can look at something and look around the market, determine the value of that asset just by staring at it. But we also know that they're humans. And because they're humans, they're going to evaluate what they see. And because they don't have a great imagination, and you force them to have to use their imagination when they walk into some shit show that if a tenant just moved into, scattered their crap everywhere, now you're putting yourself at risk. You want that person to see it when it's at its best. So always, when you're doing that type of deal, one, never go into one of those without talking to me. You go into that because somebody says, "Hey, this is going to be worth 150,000. I'll sell it to you for 100," and you have nothing else to go off of but what they tell you. Guys, do your due diligence, do some research, call me, let me explain to you how to understand what that is. Now, am I going to be able to know that value? I'm not an appraiser. I've not been in that market maybe, but there's certain things I've seen over my career that I can help you just illuminate, dig a little bit deeper in, get yourself comfortable with it. You're the CEO of your investment business. You got to make the right decision for you. Because somebody says one thing and appraiser says another, doesn't mean the appraiser sucks. Okay. We need to understand exactly what they're looking at. Gather the data first. Now, I will be the first to say that there's a lot of biased appraisers out there that do suck. We want to avoid that as much as we possibly can, but we don't have a whole lot of influence over that. So there's more details we can go into if we personally chat. Reach out to me, 602-291-3357. Just text me and we'll talk about it. We get more into that. So we'll talk more about the BRRRR thought process as we go on this week. So let's get into the charts themselves so you can see what I'm staring at. So we are looking right here at our good old 5.5. That is a chart that I keep looking at because that's the one that I can go all the way back pre-quantitative easing and see what's going on in the market and tell what's happening. So every single one of these candles, of course, represents a day's trading. The green ones represent a positive day, starts here, ends here, positive day. It swung very, very high. A red day is a negative day. News came out that made traders. Now, remember, traders are emotional creatures. They move on emotion. Where do they think the market's going to go? Everything happens here based upon what the market thinks is valuable. They put their money where they think they'll get a return, period. When it's a negative day, they believe they'll get a better return somewhere else. So they sell their positions here, or some of them, and go to somewhere else to make up any potential losses. They're hedging that market. So the losses happened here pretty significant that day. That's a big day. Now, any of these days here like this day here, this is December 11th, that's a pretty average day. Look right here, December 9th, pretty average day. December 2nd, pretty average day. Same with December 10th. All these are pretty average days. Then you see these big days. That's big news. One person starts to trade, then the next person, then it just starts a big domino. We start seeing big movement. So what we have sitting here, we're sitting right on a support. And I'm deeming this as support when you look back in over, trading in the past and where it keeps hitting and bounces off of that. See it hit here. It gives you're just going off of what the market's showing where it's stopping and rebounding, or it's hitting on a ceiling and coming back. That's where we have some of these other lines. You see where it was a support here, became a ceiling here because you get below it. Now, that's what we're staring at. We got this little bit of support right here. I'm hoping it holds. We also have, let me see here. Let's take a look at. This is the 6.0 coupon. As you see, it actually came up a bit off that same support. It's up one tick off the support. So hopefully we get a little bit better movement. And why do we have this particular type of thing going? Well, what is happening in the market today? Well, this week we have, I think, traders just kind of sitting and holding for what's going to end up coming out later this week. We have initial claims on the 9th. So showing how many people are filing for unemployment, how many people are losing their jobs, and then non-farm payrolls coming out later in this week, and the unemployment rate. So these are things that is the market's sitting here looking at. Now, what's interesting is everything you look at is in arrears, looking at the past. So you have a lot of market reaction to the new administration getting voted in. Then you also are having a reaction towards what happened already, which is the initial claims and what's going to happen there. So the reason they're responding, my opinion, it's Aaron Chapman opinion, to things that have already happened, like jobs and people losing those jobs, because that's going to affect the economy and whether it's going to continue to have inflation or it's going to start to at least tame. Now, interesting thing about inflation, a lot of people are like, well, the inflation is going down. Well, how much it's going up by is going down, but inflation is still going up. We still have way too many dollars in circulation, way too much in the form of deficiencies as far as government is concerned. Until that gets under control, we still have inflation and it's still growing. Whether it's 2%, 3%, 5%, 9%, it's still going. We're not going backwards in cost. Just because inflation goes down doesn't mean we're going backwards in cost. Doesn't mean your burritos at Taco Bell are going to become cheaper. No, they're going to still go up, but just go up slower if inflation gets more under control. But I don't believe it's as under control as we expect it to be, as everybody wants it to be. Hence why we only had 3 rate drops last year. And what did those 3 rate drops do? It only hurt our rates because we're in such a high inflation environment. That's the thing. If they're dropping those short-term rates and influencers of long-term rates to go up, it's because inflation is much higher than what they are telling us. Just know that. All right. So this is Tuesday, the 7th of January. Yesterday was a great day. And we'll see how things go on later on in the week. Appreciate you guys.